All right, everyone, welcome in again. I am going to be beating the tax drum here just a little bit more. I'm recording this in early January, and as we come out of fourth quarter, I always reflect on the quantity and quality of the tax questions that we have from our client families and other people that we get introduced to in the fourth quarter, and wanted to relay a few of those to you. So one of the top tax questions that we had from our business owner clients was, should I be paying my kids to work inside my business? Now, the key word there is work. So if your child is actually performing work, is actually doing something inside your business, yeah, you can go ahead and pay them appropriately for that. If your child or if your spouse doesn't actually work inside the business, you probably shouldn't be paying them to work in the business. The IRS tends to frown on that. Most of us are trying to comply with the tax code and use it to our best advantage. So when you're looking at that, if you have kids that are going to be able to come in and do clerical work, if they're going to be able to come in and do cleaning work or marketing or something inside your business, yeah, you can definitely go ahead and pay them. And you can pay them up to the personal exemption amount, which is about $14,000, which effectively allows them to be paid at a 0% tax rate. So it's definitely a viable strategy if you have kids or significant other who are providing actual work inside the business. Definitely a good strategy to be able to talk to your CPA or your wealth advisory team about. Some of the others that we've been asked at year end have to do with charitable strategies. So a lot of them are, I really have this cause that I want to donate to, but I don't necessarily have the cash to be able to do it. Well, that's a great time to be able to look at utilizing appreciated securities. So let's say you bought Apple for $10 a share and it's now worth $20 a share. You can go ahead and donate your Apple stock directly to a charity or to another vehicle, which I'll talk about in a minute. And you can go ahead and take the tax deduction for the $20 that you donated without having to pay the capital gains tax between the $10 that you acquired the stock at and the $20 that you donated it at. If you want to be able to take advantage of charitable donation for tax reasons in a specific year, but maybe the organization you want to give it to isn't quite ready for the money. Let's say they have a building that they want to build, but it's not happening in this tax year. It'll happen in a future tax year. Or you're not quite sure which charities and organizations you want to benefit, but you know that you want to do something to be able to give and give back. You can do something called a donor advised fund, where you're able to donate to that particular fund. It's held by any of the major custodians. It's something that our team can help you set up. And you can donate your appreciated securities, you can donate cash, and go ahead and get the tax deduction in the year in which you make the contribution to the fund. And then you advise the fund to make donations in future years. In between the time you make the charitable contribution and when it's donated out, that money can continue to be invested and grow and compound so that it's there and it's available for charities in the future. So it is a completed gift, meaning it's out of your hands, it's in the hands of the donor advised fund, but you do retain a little bit of advisory control there to be able to control the timing and direction of donations into the future. So those are a few of the top questions that we get asked every year. And also want to emphasize that tax planning should not necessarily be done between December 15th and December 31st, or even just in fourth quarter. This should be an evolving process that looks at multiple years of your income, because as a business owner, you're going to have larger events. So if you think that your sales income is going to drastically climb next year, maybe you save some of those charitable donations to the following year and you cluster them there. If you're looking at a business exit event, or maybe you're going to be selling equity in a minority deal or something like that, you want to be looking at, okay, well, what are we doing today to get prepared for that? Are we correctly structuring entities? Are we correctly structuring when we're going to choose to recognize income or gains? Other things like that. You want to look at it as a holistic picture, and you're not just complying on a year-to-year basis. You want to be looking at certainly this year and hopefully over the next 2 or 3 years on the tax planning side. So hopefully that gives you some things to think about here as we enter yet another tax year and another year of planning opportunities. So if we can help you with any of this, entrepreneuraligned.com is where you can go to get a hold of myself and the rest of our team, and wishing you all well with tax planning.